All right, welcome back, everybody. Hope everyone's enjoying their weekend. For this stream, as always, we're going to go ahead and take a look at Bitcoin. We're going to take a look at the higher time frame, just briefly touch on it, then zoom into the medium turn time frame, and then zoom into the smaller turn time frame. Let's go ahead and jump into it. So there's basically still two counts that we're monitoring. There's a bearish count, a bullish count, and a bullish variation. So the bullish count that we have been following is essentially a cycle 2 bottom. And we are impulsing up into new highs. The first perspective that we have for a bullish macro count is this right here. Essentially, I have this as an intermediate 1, then an intermediate 2, and we are still working on the intermediate wave 3, where this structure is a 1, 2, 3, 4, and a 5. Now, as of right now, I do think this wave 3 pivot is in. We are retracing and correcting for a wave 4 pivot. Then we take this high again to complete the intermediate wave 3. We've already hit the first target for our intermediate wave 3, right at the 2.236. However, we're really monitoring this 2382 and this 2618. These are our main targets here for the intermediates wave 3, this wave 3. Ultimately, I do want to see a nice relationship in time with this minor degree correction. So this will be our guideline for the timing of this correction, of what we're wanting to experience. And minimally, we're going to look for the 236 to 272. So pretty much 63 to 62K. There is a chance, due to alternation, how this was a shallow pattern, that we will actually get a sharp pattern and take it all the way down to the 3414382, which is about 60K to 58K. So alternation tells us that if wave 2 was sharp, wave 4, or if wave 2 was shallow, wave 4 is likely to be sharp. And this is something that we're also experiencing for the higher degrees as well. So for these intermediate degrees, once again, here's a shallow wave 2. We're going to expect a sharp wave 4 due to the guideline of alternation. So there's a good narrative here. We have 2 shallow corrections. Now we're going to expect 2 sharp corrections afterwards. Once we complete this wave 3, we can truly gauge where we expect wave 4 to end. But as of right now, once again, my expectations are hitting this 2382 at about 80K, and then we correct to at least 62K. There's always a chance for hitting this rare fib, the 0146, and we start to move up. But based off of normal structures and guidelines, we're going to aim for the 236 and the 272, this pocket right here. So key takeaway here is we're in a correction. We want it to be sharp, meaning we want it to be a zigzag or a double zigzag. And we're monitoring these 2 zones, these 2 targets right here. Now the variation is more bullish. It's got a very bullish perspective on it, and this is the count that basically takes us to 200K and plus. It's a bullish 1-2-1-2 scenario. Now there's still two different ways that I can see this. Let me zoom in here. So from the bullish perspective, nothing's changed. We still have our intermediate wave 1 pivot here and our intermediate wave 2 pivot here. And instead of this being a intermediate wave 3, we're seeing this as another wave 1. And it's all relative to your perspective, meaning you could see the impulse like this and have the termination of the wave 1 right here and have a sharp, quick wave 2. Or you can see the impulse like this, ending right here, and have a long, shallow, flat correction. There's basically two ways you can see this. Now, one of these counts is about to be invalidated here, finally, because once again, we've been following these pivots here. We've been following these pivots here for a long time, because both of them are valid. It's all a matter of the correction of this wave 2 that we're experiencing now, this minute wave 2. We don't want this smaller degree to be larger in time than its parent degree. So if you're looking at the pivot ending right here, you've only got a short window to observe, which is right here. Meaning if this corrects like this, then this is likely to be invalidated. Then we have to move over and look at it from this perspective, where we do have a lot more breathing room here to correct. We've got the time to make a nice healthy correction based off of our pivot being right here, and then having the A, B, C observed like this as a shallow flat correction. So I do favor this structure-wise from a bullish perspective. If you are super bullish in Bitcoin, you do want to see this perspective. So it depends if we get a quick correction and take the highs, or if it's a lengthy correction. These are the two main considerations here. Now, there still is a bearish count. I can't discount this. We have reached a very important level, though, for the bearish count. So let's go ahead and touch on that here for a moment. So with flat patterns, once again, it's always a extreme likelihood to take the previous high, because the most likely flat to occur is the expanded flat, where it takes a high and takes a low. That's the most likely to occur. The second most likely to occur is the regular flat, where it fails to take the high but it takes the low. And then the next flat to occur is the running flat. This is the third most likely, where it takes the high but does not take the low. Essentially, we're discounting this flat because obviously it took the high. So it's no longer a running flat. This leaves us with a expanded flat, which is the most likely. And then we're left with a running flat, which is now the second most likely. Due to this being a large high time frame flat, we really have to monitor potential running flat scenarios, especially if we get something like this. If we get an impulse right into this running flat territory, this could actually be our C wave right here. And we do have to move it up. Once again, this is a very high time frame flat, so we have to be prepared for anything. due to probability-wise, we're going to look for an expanded flat because once again, that's most likely to occur out of all the flat patterns. But for now, we're just going to monitor this zone. Now, internally, I will say that this is a nice looking three-way move, a nice A, B, C. We've hit minimum expectations here for that C leg, which is basically a 1-to-1. So if you measure the A leg here and look at the termination of the B leg, you can see right here we've hit the 1-to-1. We did expand beyond above it, but we at least hit the 1-to-1, the minimum expectations here. Now, when we measure the Y wave, these teal fibs right here, it is getting a little extended for a Y wave, which I've discussed several times. But taking consideration the larger degree, the B wave, we're still well within flat targets. Now, taking a step even smaller for the minor degree, the C wave, we're pretty much right within expectations for a C wave that I use, the poles that I use for a C wave. So when you look at all this, it's basically fib confluence. We've got fibs lining up right here, which is the ideal target. Then we've got fibs lining up right here, which is the moderate target. And then lastly, we got fibs lining up right here, which is our aggressive target when honestly it's unlikely to see this. So to me, realistically, this is what we're monitoring here. Something like this. Meaning, this is the first test for the bears and the first test for the bulls. If we move back up one more time, this is going to be literally the last test for the bulls, in my opinion. Looking at this right now, this still has a nice structure for it to be completed. Because internally we have that impulse. Either it's a 1 or a C, and we've hit our expectations for all these counts, or for all these fibs. We hit the 1786 for the C, the 2.236 for the Y, and the 105 for the B. Now it's about managing if this is a pivot or if it's a pullback, just like how we've been looking at with our other counts. With this, a pullback for a 4, a pullback for a 2, pullback for a 2, or is it a pivot? So pullback or pivot? That's the two questions on the higher time frame here. Now zooming in to the medium term time frame, just to encompass everything that we just discussed, this is pretty much how we're viewing everything right now. For those who have been following and watching these streams for a while, we've been monitoring these pivots right here, mainly. These have been our two main pivots. We have been aware of potentially this as a 1 or a pivot, but realistically, these have been our two main pivots that we've been monitoring. We knew this low was protected. And once again, we saw this as a 1 or an A, and then a B or a 2, and then a C or a 3. Now, developing on that, we retraced for a 4, and then we completing a extended fifth wave ending diagonal of the minuet degree. Now, once again, taking a step back, it's either a 1 or an A right here, or it's a 2 or a B. And then for the super bullish count, we have another wave 1, or this is the 3 to the 1 and the 2 right here, or this is a C to the B and the A right here. So what does this mean? This means we've got a lot of underlying trends coming together But once again, the higher time frame trend, the higher time frame bullish count, or the higher time frame bearish count is still not for certain yet. But the underlying trends are lining together. This means that we're approaching a, I don't know how to say it in a basically we're approaching a point where we're going to tip the scales either in the bulls for the higher time frame or tip it in the scales of the bears for the higher time frame. So we're reaching a tipping point. That's what I was trying to say. Now it's really about monitoring the pullback here. Once again, we have impulses ending right here. After an impulse, we're going to expect a correction. Either it's going to be an A, B, C, right to these targets that we've been talking about, or the second target. So either it's a pullback for an A, B, C, or it's a pivot for 1, 2, 3, 4, 5. So this level is really important right here for the bullish macro counts, for our bullish counts and the bullish variation. This level right here is very, very important. We do want to see some respect here. Otherwise, instead of a pullback, it's a pivot. Now this diagonal structure, this was tricky because the last time we did this stream, we were actually looking at this as a flat, like this. We were still going to take this low. But due to taking the highs and rejecting, and taking the highs and rejecting again, the structure was pretty similar to a diagonal structure. So, essentially, once again, with the price action of the highs diminishing a structure, it was reminiscent of a diagonal forming with price nearing exhaustion. This is typical for a diagonal. This is what you see visually. And we observed it breaking to the downside. So we were looking for a push down for an A retrace for a B, and then a C extension. This is what we've been monitoring recently. So we may have finished our A wave. It may not be completed. I'll touch on that very shortly. And we're working on a B leg, and then we still have a companion leg to come down. This is our minimum pullback zone. This is where we want to see the minimum pullback before we start moving up. It could come back down here. This would be ideal because we're flushing out late longs and getting new shorts into the game here. So this would be a huge liquidity zone at this point. Once again, flushing out late longs and getting new shorts in, getting late shorts into the game. So this would be a very key level here to see. But minimally, take this low, enter this territory, and move on out. That's minimum expectations. There's basically 3 ways that I'm seeing this price action from the highs to where we are right now. So let's jump into it here. This structure right here, 2 right here, is a diagonal structure. Could be an A, or it could be that wave 1. Once again, it could be that pivot, or it could be an A for pullback. Now, internally, I'm seeing this as a flat, like that. Let me zoom in just a little more here. So we've hit expanded flat targets, and we've been accepted right back into the range. This looks good for a flat pattern, meaning this is a 1, we'll retrace for a 2, push up for a 3, pull back for a 4, and then make a 5th for the C of the B, or a potential 2. It's really about, honestly, at this point, this high is protected. From my perspective, this high is protective, and we are attacking these lows right here. Although we've already taken this low, from an Elliott perspective, it's still protected as an A wave from this perspective. So we're still going to attack this low and then attack this low as well. If we're looking at it from a different perspective, meaning this still looks like a diagonal structure because these swings are getting smaller and smaller, I could still see this as a diagonal for an A wave as being unfinished. This is our diagonal for an A wave finished, and this is our diagonal for an A wave unfinished, where we are not in the B wave yet. It just depends on how high we retrace. Once we get by this area right here, where it's no longer a contracting nature, but it's more of like a parallel diagonal, or even if it starts to move up like that, it's ultimately invalidated. So this one's more of just a geometry kind of structure at this point. And then lastly, looking at the structure from the highs, just looking at it from a swing structure, it's a B, C. It's 3 waves. So once again, I do think this high is protected. Otherwise, I would say this is an A wave for a flat, and then say that potentially a B for flat where we take the highs and then come back down for a C for the flat. But I think this high is protected for right now, so I'm not looking for any higher time frame flats. If anything, this is an A, B, C for W. Then we get an A, B, C for an X. Then another 3-wave move down for a Y. This X wave very well could go to the 786. It's not likely because it doesn't really happen for double zigzags very often. The narrative of a double zigzag is the first zigzag was too short in time and strength, so then we have a connector wave to push price down quicker again for another zigzag. So it's unlikely for it to hit the 786. It is possible, but for now, we want to see a 3-wave move internally to at least equilibrium or the golden fib, and then push down for a 3-wave move. That'll be key right there. Pushing down a 3-wave move will ultimately solidify this. Now, although it's still uncertain, we have wave degree confluence. Why? Because these are stacked impulses. And these are stacked corrections, meaning it's a 1 or 3 or C. And then it's a 2 or 4. So we can play off of this internally, meaning internally we're going to get this minimally. Maximum, it could be like this. But minimally, we're getting this structure right here, no matter what. So we can play off of that. After we get this structure, it becomes difficult, because are we going to dig deeper? Or did we meet minimum expectations and now it's time to make new highs again? This is the point where things get difficult. So as of right now, we'll continue to monitor structure from a timing perspective. If this is the pivot right here ending, we want to have this correction be at least 7 days. That's at least minimum for a minute degree, because that's the smallest degree that we're experiencing right now for correction is a minute degree. So by that sense, the minimal time for this correction is going to be 7 days. Now, it could be 14 days. This is kind of average for minute degrees. And just to make this a little bit cleaner right here. So basically, we want to see the correction be like an A, B, C. It pretty much end right here at this point. However, if this correction is too shallow, this could turn into a W. then we correct up for an X, and then we push down for a Y again to this zone, where we meet minimal expectations for the average completion for minute. And then we start to push into extended territory. Like that. Ultimately, invalidation for this correction for me is going to be 1 month. So we'll push this out one more quadrant. And this will pretty much be my invalidation zone. I don't expect it to correct this long, but once again, Elliott wave is about managing expectations. So we're going to manage expectations from a structure perspective and a timing perspective. Once time and price are aligned, then structure begins to unfold more cleanly and more accurately. But this is basically what happens. You know, if we get a short correction that is not too strong, there's potential for it to have a connector wave and push down to our second target. Once again, this is the easy part. Once it gets here, it's tricky, because it could be an A, or I'm sorry, it could be a C or a W, and then this could be an X or a 1. So, as always, in our Discord, I pretty much provide almost daily updates, if not every other day. And if not, you're always welcome to just ask. That's what I'm there for. I do respond pretty quickly, and once again, I try to provide accurate analysis too. So I do spend time on these counts, and I do put a lot of thought into them. So I'm really not just slapping counts on here nilly-willy. So whenever you do ask me for a perspective, I will provide serious insight to it. And as always, I'm here for you guys. You know, publicly, privately, feel free to message me as always. Once again, I'd highly encourage you to come check us out in Discord. We engage not only in just live streams, but we chat all the time about different assets, even discussing different trading methodologies, such as DeFi. We do have a new coach. His name is Coach Mike. He is excelling exceptionally in that aspect there. So other than just trading, we do have a lot of other ways to make passive income here and teach how to engage in a trading perspective in a trading world, other than just swing trading and scalping and just trading price action as a whole. So we offer a lot. It's a great community. I enjoy it. I think you would enjoy it as well. And I hope to see you there. But as always, thank you for your time. Enjoy the rest of your weekend, and I'll catch everyone later.